Today we have a question from Gatsby, folks. Not the Gatsby in New York of the green light fame. This is the Gatsby of Houston, who says that the IRS recently accepted his installment agreement for $2,000 a month. And he's wondering, does that mean that I'm going to have to pay them $2,000 a month forever? The answer to that question, Gatsby, is no. No, because the IRS only has 10 years for the date it assesses a tax to collect a tax debt. That's called the collection statute of limitations. Now, that 10 years can be extended for certain things. Those things are called tolling events. For example, if you file an offer in compromise, during the whole pendency of that offer in compromise, plus 30 days, the collection statute is tolled or paused, okay? But barring tolling events like that, and I've covered those tolling events in our video, the IRS has 10 years from the date it assesses a tax to collect that tax, okay? So let's say, Gatsby, that this tax debt was from tax year 2015, okay, 2015. And let's say you filed your 2015 tax return in 2016, okay? Let's say you filed on April 15, 2016. The IRS probably assessed that liability probably in late May 2016. So you would have, so the IRS would have 10 years from, let's just say, I don't know, May 20th, let's say 2016. So 10 years from May 20th, 2016. That's May 20th, 2026 to collect that tax debt, okay? Let's say that installment agreement kicks in August 2025. Okay, so you got to start making payments to the IRS $2,000 a month in August 2025. Oh, how much is this tax debt? Let's say it's $1 million. Gatsby, you're a high roller, right? So you're going to be making the IRS $2,000 payments then, only for not very long. You're going to be making $2,000 in August 2025, September, October, November, December, and then another 5 months in 2026, right? So $20,000 in total you'd end up paying the IRS under this arrangement, and then after May 2026, they can't, your tax debt drops off, right? So it's a great deal. This is called a partial payment installment agreement because you're ending up paying the IRS only $20,000 on your $1 million of tax debt, okay? So, long story short, Gatsby, you're only paying the IRS off until the earlier of your tax debt plus penalties and interest being fully paid off, or your collection statute expiration date when the IRS's 10-year time limit concludes, okay? Now, compare this, Gatsby, to if you owe the IRS $10,000 for tax year 2024, right? That doesn't drop off until 2035. And you're right now starting making them $2,000 payments. Well, you're going to pay that off in 5 months. You're paying off the whole thing, right? Essentially. So, the length of time that you would be making installment agreement payments depends on 3 things: the amount of the monthly payment, the amount of the total tax debt plus penalties and interest, and the collection statute expiration date for the tax debt. And this calculation can get more, complicated because, typically people owe for multiple tax years, and each different tax year has a different collection statute expiration date, okay? With some of the tax debt dropping off earlier than other years, of course, the IRS is going to apply your installment agreement payments in their best interest, which would generally be to the tax debt that has the collection statute expiration date closest to today, nearest in the future. It can get even more complicated because the same tax year can have different assessment dates, right? So, for example, let's say you file your tax return, and on that tax return it says you owe $10,000. Okay, so the IRS would assess that shortly after you file your tax return. But let's say then the IRS audits you, and they conclude in the audit that you owe an additional $50,000. Well, and let's say that audit happened, 2 years later, right after you filed the return. Well, then that audit assessment would have a new assessment date and a new collection statute expiration date for 10 years after that second assessment date. Okay, so this gets very complicated, and sometimes the IRS makes mistakes with their collection statute expiration date calculations, and we actually have a couple cases right now where we think the IRS made a mistake with how they collected the collection, with how they're calculating the collection statute expiration date, and we're actually going to contest those because it makes a big difference for our clients' cases in these cases, which it can. Collection statute expiration date is huge when it comes to tax resolution. So Gatsby, I know that was probably a 5-minute answer that and answer your specific question. It could probably only take 60 seconds, but I hope this is educational. I hope for those of you out there who might be wondering the same thing as Gatsby, that this was helpful for you. If you owe the IRS or your state at least $10,000 in back taxes, or you have multiple years of unfiled tax returns you need to get filed, give us a call here at Choice Tax Relief, 866-8000-TAX, 866-8000-829 to schedule your free consultation. Or you can go to choicetaxrelief.com, fill out the form on the website, and we will reach out to you to schedule that free consultation. I have some other videos on the left-hand side of the screen for your education and enjoyment. Thank you so much for watching, everybody. I'll see you in the next video. Bye-bye.